2022 for the stock market did not start the way anybody expected it to start. I mean, everything is just red day after day, week after week. And when you think the worst is behind, where we hit rock bottom, no, the next day, boom, it starts all over again because people and investors and the market completely lost its mind. It doesn't even know what it's doing. People don't care on keeping stocks for now because they don't know what the future will look like, especially when it comes to inflation. But not all pockets of the market are losing money, because I'm going to share with you a sector that is going to make you a lot of money if you position yourself right now and be smart about how to invest your money. And it's also something that is going to be really in favor of this whole inflation that we know is the number one risk and the number one trending topic in investing in 2022. So let me share with you the facts before I can actually get you how you can position yourself in some of the stocks that I personally own and some that are really cheap and may hit new highs in the next coming weeks, next coming months. So getting into the energy sector, as you can see, this is the S&P 500. Today, another red day, and it has been the case for the last 5 days and the last month pretty much. But if you look year to date since 2022 started, you can see that the S&P 500 actually lost 9%. Now, when you look at the pocket of the S&P 500, these are all the companies that are exclusively into the energy sector, the oil and gas sector, companies that are producing, exploring, or transporting, distributing oil and gas and derivatives products. So here is the XLE, this is the energy ETF per se. You can see that it just like literally recovered from where it was sitting in January 2020. All right, this is January 2020, February 2020, before the whole pandemic started. Boom, you can see that it went all the way to the trash, but it didn't go boom like the tech sector or retail sector did. It slowly and gradually throughout 2021 took the time to recover, but it just literally came back to those levels. And with the price of oil currently, expectations are it is supposed to go to where it was in 2018, where prices were similar to where we are today. All right. So the most interesting thing when you compare year to date with the XLE, you can see that it's been going up 14% so far, and it's not supposed to drop anytime soon given what is happening in the world. And that's about the facts I'm going to share with you now. So first of all, you have the Russia-Ukraine crisis, which is creating an energy predicament, meaning Russia and Ukraine are two big countries producing oil and gas, especially in Europe. So if there is a conflict between these two, well, you can expect anything to actually add to the pressure, pushing prices of oil and gas even higher. I mean, just ask some of your friends that are living in Europe, or if you just watch the news, people are paying double, triple the amount of energy bill or gas bill just because of winter, and because gas prices are going to the moon, and it's not going to stop anytime soon. So number one. Number two, you have big banks calling on $100 a barrel of oil. This is not the price of, the price of oil or gas at the pump when you pump gas into your car or truck. No, this is the price of oil and gas, traded on Wall Street, So right now it's around $85 a barrel. $100 a barrel is going to create a whole new market, a whole new shift into the energy sector, especially given inflationary time. Inflation is the number one trendiest topic spoken about on investing in 2022. So it adds to everything that is already happening. Plus, when you look at the fundamentals of companies who are already reducing some of the debt they had heavily coming into 2020. So they learned the lessons, and now they're actually making sure they're getting back to being heavily profitable. So fundamentally, and looking at the market conditions on the sector, I mean, things are looking pretty interesting to push prices higher. Now, how can you position yourself into benefiting from this, because first of all, if you want to hedge your capital, if you want to make sure you don't lose money, as you know, the S&P 500 and a bunch of other stocks are doing so far this year, you want to make sure you are invested in companies and stocks that are going to be benefited or benefiting from inflation. So oil and gas is definitely one of those. The other thing is, these ETFs might be one of those, all right? But given the price, it may be a little bit expensive. That's why, but if you don't want to get too much risky into some of the stocks I'm about to share with you, then consider buying an ETF. If you don't know exactly, okay, I don't want to own a bunch of these stocks. I don't want to have something that's going to give me exposure to this whole sector, then this is a good bet. Another one similar to this will be USO. It's also another ETF that is directly correlated to the price of oil and gas. It's named United States Oil ETF. As you can see, in the last 5 years, since the pandemic started, it hasn't even started to get closer to where it was before the pandemic. So based on this, boom, we have looking at a 30, if not 40 to 50%, potential upside gains here. Some of these stocks now that you want to gain that are cheap, I wouldn't consider all the major, I would consider all the stocks within energy sector to be investable as of now. But the one I'm sharing now, not only are the one that I personally own in my portfolio as of today, but also these are the one I consider to be pretty cheap considering where they're supposed to go. All right. So we have Occidental Petroleum. Looking at the 5 years, before the pandemic, it was trading at $41, and the price target here, I think it's around 47 or 50. So you are looking at another 30% upside potential. Another one really that I love a lot, it's Devon Energy. Even though the share price might be a little bit higher, but it's considering the fact that it's been paying dividends. It pays a fixed dividend, it pays a variable dividend. So not only your money is growing, you're making gains, but you're also getting passive income pretty much every quarter. Not quite the one you want to have, so definitely worth looking into. And then you have my favorite here, Petroleum. Really cheap considering the price target on $77 a share and the way the company is being managed. So at 77, we are looking at what? We're looking at another 35% upside potential, especially as earnings are literally around the corner for these companies. And finally, one of I really recommend also is Centennial Resource Development. It's reached a new all-time high today, but the price target on these are between the 9s and the 10s. So looking ahead of another 20 to 25% upside potential on these stocks. So these are the stocks, again, that I consider to be cheap, but pretty much all the major caps, the small caps within the energy sector are considerable, investable, given the headwinds that we're looking at when it comes to energy sector as a whole. And this is going to continue to be the case for the whole year of 2022, because these prices that are expected to come not only will be here for 2022, but might also be there for 2023. So you don't lose anything putting a little bit of money, reallocating that into these stocks, because literally, as we've seen 2022 begin, things look a little bit scary. So if you want a place where to make some gains plus some passive income, this is definitely a sector to look in.